Hello and welcome to the LP Financial Services Forex Training Class Introduction to Technical Analysis videos. In Lesson 2 we will talk about candlestick charting. A candlestick chart is a style of chart used to describe price movements of a financial instrument over time. It is a combination of a line chart and a bar chart in that each bar represents the range of price movement over a given time interval. Candlesticks are usually composed of the body, black or white, and an upper and lower shadow called the wick. The wick illustrates the highest and lowest traded prices of the instrument, and the body the open and closing trades. If the price went up during a selected time period, the body is white, with the opening price at the bottom of the body and the closing price at the top. If the price went down, the body is black, with the opening price at the top and the closing price at the bottom. In our lesson, we will cover the main candlestick charting patterns: bullish engulfing patterns, bearish engulfing patterns, bullish harami patterns, bearish harami patterns, piercing line patterns, and dark cloud cover patterns. When we take a look at our candlestick patterns, Lesson 2, in Pattern 1, the bullish engulfing pattern, we see that a bullish engulfing pattern is a two-candle pattern, which can be seen as a reversal or continuation pattern. The body of the first candle is black, and the body of the second candle is white. In this pattern, the white body of the second day completely engulfs the black body of the first day. You may see a bullish engulfing pattern in a market where the atmosphere suggests the sellers are winning, but then the buyers step in and the price closes above the high of the previous day. This pattern shows a convincing strength as the buyers completely engulf the sellers. Can you see the bullish engulfing pattern? When we take a look at pattern number 1, the bullish engulfing pattern, we see that here we were, the sellers were winning. The market opened lower, below the low, and then the buyers stepped in and closed the price higher than even the high of the previous body. This white candle completely engulfed the body of this darker candle. This led to a subsequent rise in the market. This has been a good example of a bullish engulfing pattern. As we look on to pattern 2, a bearish engulfing pattern, we see that a bearish engulfing pattern is also a two-candle pattern, which can be seen as a reversal or continuation pattern. The body of the first candle is white, and the body of the second candle is black. In this pattern, the black body of the second day completely engulfs the white body of the first day. You may see a bearish engulfing pattern in a market where the atmosphere suggests the buyers are winning, but then the sellers step in and the price closes below the low of the previous day. This pattern shows a convincing strength as the sellers completely engulf the buyers. Can you see the bearish engulfing pattern? As we take a closer look at the bearish engulfing pattern, we see the market was rising. The market opened higher and then closed below the low of the previous day. This darker candle completely engulfed this white candle, the lighter shade, positive candle. We opened higher and closed below the low to completely engulf it and form the bearish engulfing pattern. And you can see that the market sold off from there. So this has been a great look at a bearish engulfing pattern. In our next video, we'll take a look at the bullish harami and bearish harami candlestick chart pattern.